Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 16th of March 2019 and we're providing our gold and silver weekly update for the week ending the 15th of March. Gold rose just $2 last week from $1,299 to $1,301, having hit a high of $1,311 and a low of $1,290. In sterling terms, gold finished the week at £979. That's down £19. And in euros, it closed at €1,148. That's down €7. Silver fell 5 cents, from $15.34 to $15.29, having hit a high of $15.53 and a low of $15.14. In sterling terms, it closed at £11.50. That's down 28 pence. And in euros, it closed at 13.50 euros. That's down 0.15 euros. The gold to silver ratio rose from 84.7 to 1 to 85.1 to 1. The Dow Jones closed on Friday at 25,848, up 138 points on the day and up 398 points on the week. And the NASDAQ closed at 7,688, up 57 points on the day and up 280 points on the week. And the S&P 500 closed at 2,822, up 14 points on the day and up 79 points on the week. All three indices reversing and improving upon the previous week's decline. Brent crude rose $1.42 from $65.74 to $67.16, and US light crude rose $2.46 from $56.07 to $58.52. The dollar index stands at 96.59. That's down 0.44 on the week. In last week's report, we pointed out that analysts were predicting that gold could in fact rise back up to the 1325 level, and by Thursday it did attempt a rally to 1311 but ran out of steam and fell back again. On Friday, the US industrial production figures for February came out at 0.1% against a forecast of 0.4%, and so proved quite disappointing. Boring though it may sound, we feel that gold is relatively range-bound for the moment, with some analysts predicting a slight bias to the upside, with virtually a similar number predicting a slight bias to the downside, though almost all agree that should gold dip below the 1275 level and hold, then there could indeed be a sharp decline straight down to the 1200 level. Once again, silver markets basically aped the gold market, though with a less positive conviction. We witness a gold to silver ratio of 85 to 1. And for us, this is not surprising. In an environment of limited or declining economic growth, no one should be surprised to see silver's gains as a monetary metal alternative being hampered with losses on the industrial demand side. There certainly is considerable support at or just below the $15 level, and probably equal resistance at the $16 level. This does not make for an exciting environment for investors and speculators, but does provide both time and opportunity for stackers to accumulate. As far as both the gold and silver markets are concerned at present, they are basically dictated by the dollar value, though those dealing in sterling will have seen more favourable buying prices recently because of the slight strengthening of sterling against the US dollar. Though until the outcome of Brexit is fully known, the uncertainty or fear factor will continue to prop up prices, which otherwise would probably be around 10% lower than they actually are in sterling terms. So what do we have on the economic calendar for next week? Well, on Monday we'll have the Home Builders Index for March. Tuesday, factory orders for January. Wednesday, the all-important Federal Reserve announcement on interest rates followed by Jerome Powell's press conference. Naturally, we see no amendment or change to the interest rate, either up nor down. But analysts once again will be listening quite keenly, as will we, to tone and any further indication of the Fed's relatively dovish approach for the near future. Thursday, current account deficit figures for Q4, and Friday, the market manufacturing and services flash PMI for March, existing home sales for February, and the federal budget for February. So once again, the important day is Wednesday. So in conclusion, there will be some volatility prior to the Fed's announcement on Wednesday, though we would expect sentiment to be marginally more positive for gold and silver prices than negative. Having said that, of course, we still lean towards the assessment that these prices will fall below current levels once all of the controversial economic and political news is out of the way and a deal is eventually struck with China. Meanwhile, we hope you have a most prosperous week ahead, and for silver members, just a reminder that our membership webinar has been added to the webinar archives, and we have begun loading a number of courses and ebooks in the relevant section of the website, which can be downloaded for free. We have already added 5 and will be adding between 3 to 5 each week for the next 6 weeks. So do take advantage of them, as they will more than underpin your membership fees, without all of the other benefits on offer. And finally, we wish to express a brief apology in that there have been some videos that we have produced which we were not able to place on the website due to technical difficulties. These are currently being remedied, and Inner Sanctum members will see a spate of new videos being put up in the next few days. Thank you, as always, for listening, and please do not forget to comment. Whilst not all of the comments will be answered, we certainly read them all and appreciate each and every one that is constructive. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.